We are discussing today the corporate tax and public clarification has already been issued by the respective authority. They have given more clarification on the applications of the corporate tax on the free zones. They have clarified the excluding activities. They have clarified the qualifying activities. We'll discuss all these in detail. By the way, there is no major difference in our previous understanding. The previous understanding that we have, this is almost same, but we'll discuss everything in detail. So far as our previous webinars are concerned, we have already conducted 20 webinars. These webinars, list is given here. These webinars are overview of the UAE corporate tax law, resident and non-resident taxable persons, exempt persons, out of scope person, UAE sourced income, permanent establishment and its history, corporate tax registration, and at the end you can see reliefs, free zone. Till now, we have conducted two webinars on the corporate tax on the free zone. If you wanted to see the previous webinar, you can visit our channels chriscooper.com on the YouTube. So this is our third webinars on the free zones. So first of all, before going into the detail, we'll look into this scope of the corporate tax law on the free zones. We all know this that 0% corporate tax is applicable on the qualifying income and 9% tax is applicable on the non-qualifying income of the qualifying free zone person. We have already discussed in details what is free zones, what are the free zone persons, what is the qualifying free zone person, what is the qualifying income. We all know this that there are six conditions for the person, for the free zone person to be considered as a qualifying free zone person. These six conditions, out of these six conditions, four conditions were given in the law, and these four conditions were maintain adequate substance in the free zone, deriving qualifying income, not elected to be subject to corporate tax and complied with the transfer pricing rules and regulations. Two more conditions were introduced in the respective decision that was introduced in the later on. These two conditions were the non-qualifying revenue should not exceed the de minimis requirement, and qualifying free zone person will need to prepare the audited financial statements. So these were the six conditions for the qualifying free zone person. If these six conditions are being met, we can say that the free zone person is a qualifying free zone person. Once these six conditions are being met, then we'll discuss what is the adequate substance requirement. In the adequate substance requirement, we said the qualifying free zone person must have the core income generating activities in the free zone. Then they need to meet the adequacy test as well. And this adequacy test was adequate assets in the free zone, adequate employees in the free zone, and adequate expenses in the free zone. Any of the company free zone persons, if they are not meeting adequate test, this is the one of the six conditions. So we will assume that the person is not a qualifying free zone person, and person will not be able to enjoy the benefits of 0% corporate tax on the qualifying income. Then we'll discuss the de minimis criteria. This de minimis criteria was 5% of the total revenue. There are 5 million dirham, whichever is lower. If your non-qualifying income is 5% of the total revenue or maximum up to 5 million, then we assume that the person met the free zone person has met the de minimis criteria. We have already have a very comprehensive webinars on this. So this is the criteria that we already discussed in detail. Then how to calculate the de minimis percentage? We will never ever include all income, non-qualifying income. We will never ever include the all income of the qualifying income, total income, the specific criteria for the de minimis percentage. We said the non-qualifying income include the income from the excluding activities. We know there are 6-7 excluding activities plus the non-qualifying activities where the transactions are not with the non-free zone person. Then we discussed that the total income will be all revenue except the revenue of permanent establishment. This permanent establishment can be a domestic permanent establishment, it can be a foreign permanent establishment, and it will not be including the any income from the immovable property unless the income from the immovable property is the qualifying income. We know what are the conditions for the immovable property that will generate the qualifying income. Then we discuss other than immovable property, if the person is in the free zone, the maximum we have categorized the whole universe into 4 categories. We said there is a one specific area, this is a specific free zone, then all other free zones. After this we discuss the domestic UAE, or you can say UAE mainland. Then after this we said rest of the all universe. So if the jobs a person, based upon this we discuss the criteria that will discuss if the free zone person is generating any income from the other free zone person, then it will be qualified, it will be qualifying income, it will be subject to tax at 0% unless the income is falling out of the excluding activity. There are 6 to 7 excluding activities. Then we said if the free zone person have a transaction with any other free zone person, any other person, any other non-free zone person, which can be on the UAE mainland or it can be on the anywhere across the universe, anywhere. So if the free zone person having any transaction with the non-free zone person, then we said all the incomes of the free zone person will be considered non-qualifying income except the income from the qualifying activities. We have discussed the 13 qualifying activities. Then we discussed the immovable property. The word would have been in the top right bottom, it would be immovable property instead of movable property. Apologies for this. So for the immovable property we discuss there are special rules for the immovable property. If we discuss if the person is a qualifying free zone person, sorry, property is in the free zone, property is a commercial property, that property is not being used for accommodation, residence or living purposes. Like this will not be applicable on the hotels, motels, service apartment, because these are being used for living purposes and the property is being used exclusively for business purposes and transaction has been made with another free zone person. If all these conditions are being met, sorry, if all these conditions are being met, then we said any income generated from the immovable property which is within the free zone, that income will be qualifying income. Other than this, any income from the immovable property will be considered non-qualifying income. We have summarized the discussion in this chart with that income derived from the free zone person or income derived out of the free zone person. If the income is derived from the free zone person, then we need to check income is being derived from the other free zone person, like income is being derived from the juridical person registered in the free zone. Income is not related to the excluded activities. Yes, if the free zone person is generating any income from the other free zone person, this is not falling in the excluded activities, then we said it will be considered qualifying activities. Then we say it will be considered qualifying income, sorry. Then we discuss income received derived from the free zone person. If this income is being derived from the free zone person, then we need to look into this income derived from the immovable property in the free zone. As we discussed, if commercial property being used exclusively for business purposes, property is within the free zone, transaction is being made with other free zone person, and property is being exclusively used for business purpose, not being used for living purpose, then income, any income generating from such property will be considered qualifying income. Then we discuss income derived out of the free zone. If the income is being derived out of the free zone, the income related to the PE, this PE can be domestic PE or this can be foreign PE. Also, in both of the cases, income will be considered non-qualifying income. Then income derived from the other free zone person, non-free zone person, then we need to look if this income is generated from the qualifying activities. If this income is being generated from the qualifying activities, then it will be considered my qualifying income, otherwise will be considered my non-qualifying income. Based on this discussion, we had already established that the income derived from the free zone commercial property, where the property is in the free zone, property exclusively for business purposes, it will be considered qualifying income. Income derived from other free zone person except income from excluding activities, it will be considered, it will be income derived from the other free zone person except income from the excluded activities. If this income is from the excluded activities, then this income will be considered qualifying income. If derived from the non-free zone person from qualifying activities, which are not excluding activities, will be considered qualifying income. Non-qualifying income, which satisfy the de minimis criteria, this will be considered qualifying income as well. So based on the discussion we have established, there are 7 activities basically. It will be a transaction with the natural person, transaction with the natural person, any transaction being made by the banking activities, insurance activities, finance and leasing activities, immovable property, intellectual property assets, or any incidental activities. These 7 categories, we said these are the excluded activities, but there are some exceptions. Now the basically consultation document has been introduced based upon this consultation document. So within the consultation document, I have taken the extracts of the consultation document, and we'll discuss all these extracts in one by one. So any transaction with the natural person, fund management services, except the fund management services, wealth management services, ownership, management and operation of ships, financing and leasing of aircraft, including engines and portable components. Other than these 4 categories, any transaction with the natural person will be considered excluded activities. But if the transaction is being made with the natural person, and the natural person, fund management services are being provided, wealth management services are being provided, ownership, operation and ships management services are being provided. They will discuss all these categories in our next discussion in the next slides basically. So from the natural person, and we can say any transaction that is being made with the natural person, it will be excluding activities except the 4 transactions. In the banking activity that are subject to regulatory oversight, a competent authority, they said banking activities include receiving funds, deposits, and providing services like credit facilities, funding facilities, currency exchange, monetary transfer fund, monetization, stored value electronic services, retail payment, digital currency, and virtual banking services. All these services are falling under the banking activities. And if these services are being provided, it will fall under the excluded activities. They said it also includes the license financing activity, like acting as a principal or financial position of the licensed financial institution, but not limited foreign exchange, financial derivatives, bonds, scope bond, equities, commodities. All these services will fall under the banking activities. The scope of banking activity does not include fund and wealth management services because these are the special qualifying services. This is the reason they have not included under the banking activities. Such as activities are separate and distinct activity that can be performed by a free zone person, which will be qualifying activity, will be subject to tax at 0% corporate tax. Then there's insurance activities. In the insurance activities, these are basically if the insurance company which is based in the free zone and the company is signing the contracts for insurance and insurance services, we are effecting carrying out contract for insurance in both life and non-life insurance. So all will fall under the insurance activities. But they have given some exclusion in detail. The exclusion is the insurance activities and captive insurance activities. These are the excluded activities basically out of this. So insurance is my excluding activities. Exceptions are captive insurance and reinsurance activities. Captive insurance and reinsurance activities are qualifying activities. It will attract 0% corporate tax. So captive insurance means form of self-insurance. Insurance companies are usually, this happens as the insurance companies are setting up a company or setting up a subsidiary that is doing the insurance of the group company. They are not selling any insurance out of the group. So this is self-insurance. The captive insurance means form of self-insurance in a company of group of companies establish their own insurance company to provide coverage to their own risk. The captive insurance company operates as a subsidiary of the parent, or it can be a separate standalone company by the insured parties. It is formed primarily to ensure the risk of the owners and affiliated companies. So these are the captive insurance. They have defined it. Basically, in the overall, I can say the insurance activities are excluded activities. It will be subject to tax. Reinsurance and captive insurance activities are falling under the exceptions. These are the qualifying activities, and 0% corporate tax will be applicable on these activities. Sorry. Then they defined the finance and leasing. They said the finance and leasing activity, these are subject to regulatory oversight of the central bank, Dubai Financial DFSA are financial regulatory authorities. So if these are being subject to regulatory of DFSA, FSRA, financing and leasing activity, they are given the detail of the financing and leasing activities as well. They're subject to regulatory oversight such as the provision of credit or financing for any kind of consideration and letting, hiring out, or otherwise granting the right to use an asset in exchange for the rental other. So important thing is, if this is a lease finance, if this is a finance lease, if this is the operating lease or any kind of arrangement where the assets is being, or some sort of facilities are being provided against the consideration, if the consideration is there, either this is a finance lease, either this is an operating lease, it will fall under the finance and leasing activities, but this should be subject to oversight of the central bank, DFSA, FSRA. The important thing is, related party financing is not regulated, is not subject to regulatory oversight. If this is a related party financing, even these activities are not being monitored by DFSA or FSRA or the central bank, still it will qualify as the qualifying activities. It will generate qualifying income. Moreover, this doesn't include the exceptions are basically financing or leasing of aircraft. These are the exceptions. Financing services to the related party. These are the exceptions. On overall basis, we can say, if the financing leasing services are being provided where consideration is being received, this financing leasing activity will fall under the excluding activities. Exceptions are if this finance or leasing are being provided of the aircraft or financing the related party. Even these are not subject to regulatory oversight of central bank, still it will be considered a qualifying income. Otherwise, other than this, all the activities of financing leasing will be considered excluded activities and it will be subject to corporate tax. The ownership exploitation of immovable property. We have discussed the immovable property already in detail. The only one stream is there from the immovable property that will generate qualifying income. Other than this one stream, all income from the immovable property will be considered non-qualifying income. It will be subject to tax. Ownership exploitation of intellectual property assets. So what is the intellectual property assets? These are the basically intangible assets like trademarks, like patents, like copyrights, like brands, like technical know-how. These are my intangible assets. So with respect to the separation of intangible assets, these intangible assets are separately identifiable income. The same definition has been given in the economic assets. These intangible assets are each separately identifiable income. It will fall under the excluded activities. It will not be considered subject to corporate tax. But if the asset is being used internally to develop one brand, like Crest Cooper is a brand whether we already internally developed, and this brand is being used for business purposes, it's not generating separately identifiable activity, identifiable income, that it will not fall under the excluding activity. And at the end, they said all other income which is ancillary to the above all activities, it will be considered, it will fall under the excluded activities. Now, these are the income that were discussed. What are the excluded activities? And if you wanted to give your opinion, you have a time till August 2nd, 2023. You can write to the respective authority. You can share your point of view. Where do you feel this should be not a correct treatment, should be proper refined treatment? Wherever you feel you can give your opinion, definitely they will respect it. They will look into this. Now we're coming back to the qualifying activities. Excluded activity we have discussed in detail. Now we are going to the qualifying activities. We all know this. These 13s are the qualifying activity as we discussed in the very beginning. If the qualifying free zone person is giving a dealing, having any transaction with the non-free zone person, any income generated from the non-free zone person, it will be considered non-qualifying income, except the income that is being generated from these 13 activities, which will be considered qualifying activities. Manufacturing of goods or material, processing of goods or material, holding of shares and securities, ownership, management and operation of ships, reinsurance services that we already discussed, fund management services, wealth and investment management services, headquarters services to the related party, treasury and financing services to the related party, financing and leasing of the aircraft, distribution of goods and material, logistic services, ancillary activities to the above. These 13 are my qualifying activities. If the income is being generated from any of these activities by the qualifying free zone person, it will be considered qualifying income. In the manufacturing of goods and material, they have given further clarification on this. They say there are there can be two types of manufacturing. First can be a tall manufacturing, second can be full-fledged manufacturing. Tall manufacturing means if the free zone person is providing, even the tall manufacturing concept, if any other party is providing contracting services to any other party, this is called tall manufacturing. One party is winning the contract, outsourcing it to anyone else. That party is doing the job, manufacturing the goods or manufacturing the material, giving it back to the one party, that party is giving back to the customer. So this is the tall manufacturing, outsourcing the manufacturing activity. So if this is a tall manufacturing, there will be a relationship in between tall manufacturing company and it will be a contractor. So the company, the tall manufacturing company must be based in that qualifying, must be a qualifying free zone person. If the qualifying free zone person is providing tall manufacturing services to the contractor, it doesn't matter wherever the contractor might be on the mainland, might be on the other free zone, might be in the same free zone, might be anywhere across the globe. So any services provided by the qualifying free zone person, any tall manufacturing services by the qualifying free zone person to the contractor, it will be considered qualifying activities. By the way, there is no change in our previous understanding. We had the same understanding as well. Better they have given a further clarification on this. Then full-fledged manufacturer. Now the full-fledged manufacturer, they will be buying the material, they will be buying the hiring the labor, they will be applying the overheads, then they will be producing one product. This full-fledged product they are selling, there is a possibility this full-fledged product, this is being sold to the distributor, this product is being sold to the non-distributor. We know this, that the distribution is a qualifying activity. If the full-fledged manufacturer is selling the manufactured goods to the distributor, so there will be two components. One will be the manufactured goods, second will be the margin at the top of the manufactured goods. So if the goods manufactured by the self-manufactured by the full-fledged manufacturer, and this manufacturer is selling the goods to the qualifying free zone, to the other free zone person, or to the mainland party, or to the same free zone person, or to the anywhere across the to the person anywhere across the globe, so it will be considered a manufacturing activity and distribution activity. And both of the activities, we know this, manufacturing and distribution, both are qualifying activities. Let me repeat. Full-fledged manufacturer can be providing two types of activities. It can be manufacturing of the goods and margin and profit. Both of the activities are qualifying activities. Once both of the activities are qualifying activities, so both of these services will generate qualifying income and it will be subject to tax at 0%. Now, if the full-fledged manufacturer is selling the goods to the non-distributor, again two components are there. One component is the manufacturing, second component is the margin. Now the goods are being sold to the non-distributor, to the retail, to the end user. If the goods are being sold to the end user, it has been given in the consultation document, the manufacturing portion will be zero rated and profit margin, it will be subject to corporate tax. So I think everybody is clear regarding this. We'll look into the basically diagram that has been provided by the respective authority. Then the processing of goods or material. Processing of the goods and material. In the processing, they said processing of material include preparation, treatment, transform of goods or material for further commercial or industrial or sale. Important thing. All points are very important. They are asking if you are changing the shape of the material through preparation, through treatment, through transformation, through conversion, and very important, this material is being used for sale, for use. It can be commercial use, it can be industrial use, it doesn't matter. So if you are changing the shape of the material, sorry for this. So if you are changing the shape of the material, shape of the goods, it will be considered processing of goods and material. So processing of goods and material, they said it will be considered qualifying activity as well. We know that this is the qualifying activity. Then holding of shares and securities. They have given very detailed page, very comprehensive page on the holding of share and securities. In the holding of share and securities, the holding of shares and securities refers to the holding by way of investment as a security, share, stock, debentures. So your investment can be in anywhere. It can be ordinary share, it can be redeemable shares, it can be debentures, it can be in any other security or in any other asset which gives you the right to the profit and which gives you the right in the liquidation proceeds. So it will be considered holding of shares and other securities. So in holding of share, they have further clarification, holding of the equity for a profit or liquidation proceeds, then holding of other securities, assets as rights, they said, which can be converted into security, which gives you a right to purchase a security. And then once you have a security, you will have a right in the profits and you will have a rights in the liquidation proceeds. So they said, if you are holding any type of rights on the assets, rights in the securities, it can be stock, debenture, as I mentioned, it can be assets, or it can be derivative, financial commodities, other, all these things. If you are having a rights in any of this, which gives you a right to convert it into the security, or which can right to purchase a security, and this security will give you further rights into the profits and liquidation proceeds, it will be assumed holding of shares and securities. The important thing is, whatever the instrument that you're holding, this instrument is giving you a right into the profits and liquidation proceeds. They put further conditions for the qualifying free zone person. There's some these qualifying free zone person, these conditions, if the qualifying free zone person is holding of other securities, assets and rights, they said the free zone person must be directly or indirectly majority owned or controlled by the government entity or government controlled entity, qualifying investment fund, domestic or foreign pension or social security fund, foreign collective investment vehicle in a recognized jurisdiction, family foundation, qualifying public benefit entity, or any other free zone person that is being regulated by the Dubai Financial Services Authority or the Financial Services Regulatory Authority, and any other person as may be prescribed by the minister. So this is the requirement for the free zone person. Sorry, if the free zone person is holding of securities, assets or rights, this is other than holding of shares, or they are asking the free zone person must be used to hold one or more assets or securities or rights, that sole purpose of raising or facilitating raising funds, financing funds, equity, capital, debt, or the reissuance of securities or other financial instrument representing a beneficial interest in the assets or securities or rights taken over by the free zone person. So these are the conditions for the holding of shares and holding of the securities. So if these conditions are being met, then we will say the person is this person is carrying a qualifying activity. If all these conditions are not being met, then we'll say the person is not carrying the qualifying activity. Ownership, management, and operation of ships. Two things are very important that they have given, that the ships are being used in the international transportation of goods and services, and ships are not being used for domestic leisure recreation vessel. If any company is providing this operation, management, and ownership of the ship services, except these international, except the domestic transportation, except the domestic leisure and recreation vessel, it will be assumed these are the qualifying activities. Reinsurance services that we already discussed in detail. Reinsurance is partly sharing the contract. This reinsurance services will be considered a qualifying activity. But important thing is there is a possibility that one insurance company at the same time they are providing two types of services. One is insurance services, one is the reinsurance services. So reinsurance services will fall under the qualifying activities. It will be subject to 0% corporate tax. And insurance services, it will fall under the excluding activities. It will be subject to corporate tax at 9%. So we need to look into the activities of the each qualifying free zone person. What are the qualifying activities and what are the non-qualifying activities? Then there's a fund management services. There's the fund management services. They said providing fund management and advisory services to the fund. So one person is there within the free zone qualifying person is providing fund management services, managing the funds. And these have been licensed by the Dubai Financial Services Authority or Financial Services Regulatory Authority or any other authority. And they are getting the fee in the form of management fee, performance fee, investment authority or cost reimbursement. And these fund management services will fall under the qualifying activity as well. Wealth and investment management services, these fund investment management services we already discussed. If these provided, even these are being provided to the natural person, these services will fall under the qualifying activities. These must be regulated by the DFSA, FSRA, must be regulated by DF Security and Commodity or on any other regulatory authority as prescribed by the minister. Furthermore, the qualifying free zone person must be established under the applicable free zone single family office. This is a further clarification. They said the qualifying free zone person must be established under the family free zone single family office or multi-family office regulations are appropriately licensed by the Dubai Financial Services Authority, FSR, any regulatory authority as prescribed by the minister. And this free zone person is providing wealth and investment management services. Even these services are being provided to the natural person, still it will fall under the definition of qualifying activities. We all know this headquarter services being provided to the related party. In this case, usually headquarter is responsible for their performance and success, and headquarter is setting the direction, providing the direction, management services, risk management services, coordination with the group procurement, centralized services. So any services that are being provided by the head of headquarter services to other related party, it will fall under the definition of qualifying activities. Treasury and financing services to the related party, as we discussed earlier, these are not under the basic. These are treasury and financing services. These are the exceptions. We have already discussed these would fall under the excluding activities, but there are some exceptions. This is one of them. Intragroup financing, treasury services, including a provision of cash, liquidity management, financing, debt financing, financial risk, and all these being provided to the only juridical person or branches of the juridical person, including centralized payment and collection activities. It will fall under the treasury and financing services. It will fall under the qualifying activities. Financing and leasing of aircraft. If any company is providing any aircraft, even being provided to the natural person, leasing of the aircraft, other specific engines or whatever component as I mentioned. So all these fall under the financing and leasing activities, chartering of land to natural person, arranging financing for the airline. So important thing, you will look at just examples as well. It will all fall under the qualifying activities. Distribution of goods and material. If the goods are being distributed to the retailer or to the wholesaler, to the distributor, it will be qualifying activities. Other than this, it will be non-qualifying activities. In this important thing they have mentioned, if you are doing a third port shipment, suppose you are buying the goods from China and selling it to Africa, but the person based in Africa is a distributor, so it will fall under the qualifying activities. In the same way, if you're buying the goods through the designated zone, you are selling within the mainland to the distributor, still it will fall under, it will be considered a distribution of goods or services. It will be a qualifying activity. Logistics services, they said in the logistics services, it include cargo handling, warehousing, container storage, transport agency services, custom brokerage services, forwarding, brokerage services, all these services, it will fall under the logistics services. It will be subject to tax at 0%. But if they're asking the last mile delivery service, I just wanted to give you an example. So qualifying free zone person is delivering the goods to the mainland. Then from the mainland, another party is taking the goods and delivering it to the customer. So billing is being done from the qualifying free zone person to the end user. That billing will be considered qualifying activity. It will be zero rated. But the last mile delivery that is being provided by the UAE mainland entity, it will not be considered logistic services, because this services is being provided on the UAE mainland. It's not being provided to qualifying free zone person. So that last mile delivery, that other services outside the free zone through the PE branch shall result in 9% corporate tax. So if this services is being provided by the PE, if these being services are being provided by the branch of the qualifying free zone person on the mainland, so it will fall under the non-qualifying activity. It will be subject to tax. So all incidental activities, we know all this. Let me go through this public consultation document very quickly. I think you will be able to you will be able to view my screen. So in the public consultation document, we have already discussed in detail contract and toll manufacturing. They have given one example. In this one example, you can see the manufacturing company is in the free zone, in the designated zone, but this manufacturing company is toll manufacturing for the contractor. And it doesn't matter where the contractor may be in the free zone, might be on the mainland. The services being provided by the manufacturing company to the contractor, it will be considered a qualifying activity and will generate qualifying income. In the next slide, three options are there. Apologies, the slide is a bit blur. Three options are there. In the first option, the manufacturing company is providing the services. This is full-fledged manufacturer. This full-fledged manufacturer is providing the services to the customer. There are two categories, as I mentioned. One is the profit. Second is the manufacturing. Since these services are being provided, goods are being delivered to the non-free zone person. Let me see, might be I will be able to enhance this font. Yeah. Since the goods are being delivered, I think I'm not able to share my screen. Let me double check. Just be on the line, please. So in the second example, as I mentioned, the full-fledged manufacturer, this full-fledged manufacturer is manufacturing the goods and selling it to the non-distributor, non-retailer. There will be two components. One will be a profit, one will be manufacturing of the goods. Manufacturing of the goods will fall under the qualifying activities, and profit will fall under the non-qualifying activities. In this category, you can see the full-fledged manufacturer is selling the goods to the distributor, and distributor is based in the mainland or is out of the UAE. In both of the cases, it will be considered qualifying activity and it will be subject to 0% corporate tax. In this example, a free zone person, two free zone person, we all know this. If the qualifying free zone person, if the qualified free zone person is selling goods to other free zone person, even providing services to other free zone person, still will fall under the definition of qualifying. It will generate qualifying income. Next in the sorry. Next illustration, you can see ownership, management, and operation of ships. In this, you can say this is a shipping company. This shipping company is based within the free zone. And if this shipping company, we are assuming for all discussion purpose, this is a qualifying free zone person. And if this qualifying free zone person is taking the wet lease, time charter, taking the ship on charter, and this is international transportation of goods and goods or services, then it will generate qualifying income. And if these are not providing the international goods and services, or these are providing any sort of layer within the UAE, a ship does not include a domestic layer, recreation vessel, and fishing vessels. So basically, if these activities are not being provided and this shipping company is taking the ship on lease and providing international transportation of goods and services, then it will fall under the qualifying activity. It will generate 0% corporate tax. Next is the reinsurance services. As we discussed, this is the insured person, the primary insurer. This is providing, this is a free zone person, and it doesn't matter wherever they are providing insurance services, it will be subject to tax because insurance services are falling under the excluding activities. So if the mainland anywhere across the globe, their activity will be straightforward subject to corporate tax. Now the reinsurance services, for the reinsurance services, this is compulsory that the person is a qualifying free zone person. If the person is a qualifying free zone person, and this qualifying free zone either within the free zone or on the mainland or out of the UAE, in all these cases, reinsurance services and captive reinsurance, it will fall under the qualifying activities. It will be subject to 0% corporate tax. This is again, as I mentioned in my previous discussion as well, this is the insurance company. At the same time, this insurance company is providing reinsurance services, and at the same time, they are providing insurance services as well. So insurance services will be subject to corporate tax. Reinsurance services will fall under the qualifying activity, and it will not be subject to corporate tax. Now the primary insurance, again providing insurance activity, insurance services are subject to tax as we discussed in detail. But we all know this, but if this non-qualifying income is below threshold, then it will be considered a qualifying income. Then fund management services. This is a fund manager. This fund manager, which is based in the free zone. From the free zone, they are managing a fund. Fund manager has been appointed by the investors or sponsors. This fund manager is providing the fund management services. It doesn't matter wherever is the fund. Might be the fund is in the free zone, mainland, out of the UAE. 4 categories we have already discussed of the whole universe. It doesn't matter wherever is that fund. So if the fund management services provided by the fund manager, where the fund manager is hired by the investors or sponsors, and fund manager is getting management fee or performance fee or investment advisory services, whatever the income fund manager is generating from the management of the funds, and wherever the fund is located, it doesn't matter, income from that, it will be considered qualifying income. Headquarter services, as I mentioned, headquarter services, if this is a free zone company, from the free zone they are providing headquarter services to the related party, where they are responsible for their performance and for the success. If they are responsible for the performance and success, they are providing risk management services and so many other services, setting the direction, all these services. The in blue lines showing this company, this is a free zone person, this free zone person is providing this headquarter services to related party on mainland, related party on mainland, related party out of the UAE, related free zone party, all these parties, wherever these are related party, if these fund management services, sorry, if these headquarter services are being provided by the qualifying free zone person, it will generate qualifying income because this is the qualifying activity. These are the treasury and financing to related parties. This is the free zone person, this is a company, treasury company, this is providing headquarter service to the headquarter, to the related party, to the mainland. It doesn't matter they are in the free zone, foreign or on the mainland. But the free zone party is providing intra-group financing and cash management services. If the free zone party is providing intra-group financing or cash management services to the related party, either in the mainland, either on the free zone, either out of the UAE, in all these cases, it will fall under the qualifying activities. It will be subject to 0% corporate tax. These are the chartering of the ships, as we discussed. If the ships is being given on charter to the natural person, even to any other party, it doesn't matter, free zone, mainland, foreign company, it will generate qualifying activities. This airplane charter, this person is based within the designated zone. This is the qualifying free zone person. Provision of financing. This is this here we discuss basically leasing and chartering of aircraft. Now this is also financing of aircraft. This is important, interesting. Now this is the airline. This airline is in need of some sort of financing. They are approaching intermediate party which is in the free zone. They are approaching another intermediate party which is in the free zone. They are approaching a bank which is in the free zone, mainland or foreign. This bank is financing. This bank is financing not to the related party, any other. This bank is basically on the free zone. Banking is falling under the excluding activities. We know this. So special excluding activities, so any services provided by the bank, either doesn't matter wherever the bank, it will be subject to corporate tax. Now this borrower is financing to this intermediate lesser than there to the layman. This is basically both are falling within the qualifying activities. We know this is pertaining to the financing of the financing of an aircraft. Free zone person is financing the aircraft or chartering the aircraft. In both of the cases, by the qualifying free zone person, it will fall under the qualifying activities. It will not be subject to corporate tax. Last, this is the qualifying, sorry, distributor. Distributor is in the designated person. Distributor is ordering the goods from the country. Goods are moving from the manufacturer to the retailer directly or distributor. Make sure this is not the end user as we discussed earlier. The free zone person, Java-based company, is ordering the goods from China. Goods are moving from China to Africa. But in the customer in China or Africa, this is not the end user, this is a retailer or distributor. So income that is being generated by the qualifying free zone person, this income is a qualifying income. In the same way, if this qualifying free zone person is based in a designated zone, if they are ordering the goods are being delivered on the UAE mainland, not to the end user, but to the retailer or distributor, still it will generate qualifying income because it is qualifying activities. Goods are not being given to the end user, but to the retailer or distributor. Sorry. The last one, as we discussed earlier, logistic services includes, what do they include? We have discussed all these services, but if these services are last mile delivery being provided by the PE or the branch of the qualifying free zone person, these services will be subject to tax because this is being provided by the PE. These are being provided by the branch on the UAE mainland, so it will be subject to corporate tax. But otherwise, whatever the invoice that is being generated by the logistic company to the mainland where the goods are being delivered, these shipping, receiving, warehouse, and all these packaging, this activity, this leg will be qualifying activity, this leg will be non-qualifying activity. This will be subject to tax at 9%. This leg will be qualifying activity, it will be subject to 0% corporate tax. Thank you very much. This is over from my time, and I think I have booked the slot for 1 hour. I have just 5 to 7 minutes for the questions and answer. If you have any question, we can discuss it further. Is the piped as gas then available industries in Dubai Industrial City Free Zone, Kizad Free Zone, through which pipeline network, just like in Pakistan, industries have to purchase them in the cylinders? Secondly, can you please guide me about the cost of the gas per cubic meter? Can you drop me an email for this very comprehensive and highly complex questions? Ramiz, I would really appreciate it. You are asking, is the piped gas available for industries in Dubai Industrial City Free Zone and Kizad Free Zone through pipeline network, just like in Pakistan, or industries have to purchase them in the other cylinders? Secondly, can you please guide me about the cost of gas per MMBTU? Very technical. Landed in the above free zone, that will not kind of. Can you drop me an email on this? We can have a call for the discussion on this. We're in a better position to discuss it further. Ramiz, also can you guide me about the tax exemption available to free zone, non-free zone, and mainland person? Tax exemptions available, does these differ across different industrial city? Free zone, they have the same treatment. Tax exemption, we know what are the what are the exempt persons and what is the specific exemption. We know the participative exemption is there, dividend is exempt, so many other different incomes are exempt as well. No sound short. Okay, sir, unable to see the slide. How can we get a copy of the consultation paper? I can drop an email on this. Can free zone companies can register for the corporate tax now? Yeah, you can register. There's no harm in it, but they know as a specific timeline and threshold. Third port shipment by UAE free zone qualifying company where they are not acting as a distributor or design with one. Will the profit be subject to 9% tax? Yes, profit will be subject to tax. Manufacturing activity will not be subject to tax. CB is asking, do you have any idea about the Mawafaq registration? It's appearing on the FTA portal. Mawafaq registration. Let me know what is this Mafak registration. I look into this as well, please. Thank you very much, guys. And I think again it was some sort of mismanagement. Again, the last moment, some driver were not working in my laptop, so I was not able to connect my Wacom tab as well. And I think the slide was not even being shared in the very beginning. Might be it was being shared later on. I'll try my best next time to be prepared on time. We have one important thing that we need to discuss in our coming lecture. This is transfer pricing, and we need to discuss the participative exemptions as well. These are the very two hot topics. A lot of people are asking these questions about the transfer pricing. A lot of people are asking this question about the participation exemptions. In our next lecture, we'll discuss all these in detail. Take care. Thank you very much and have a lovely evening. Thank you. Bye bye.
Thanks for watching the video. Click on the bell and subscribe to the YouTube channel.